Hi everyone, I'm Amanda Dahlstrom, and I'm going to do the homework support for lesson 4, which is chapter 3, exercise 5. And I'm just going to share my screen here, and let's go ahead and get started. So here we go. All right, here we are. So here we have exercise 5, and we're given a tabular analysis of all the transactions made during August 2017. And our assignment is to create a income statement, retained earnings statement, and a balance sheet. So I've gone over here in Excel and I've created kind of a mock-up. So for our income statement, first thing we have is our header, which is the company, the title of the statement, and then we're going to put for month ending August 31st, 2017. Because for income statements, we put a time period. Okay, first thing we want to have on here are our revenues. And so if we want to come over here to our analysis, you can see in the descriptions over here, we have one, which is a service revenue of $10,200. So we'll go ahead and put in service revenue for a total of $10,200. Next thing we put on an income statement are our expenses. And let's see if I can do this. It doesn't work very well. Never mind, sorry. Okay, so if we come over here, we see we have 3 expenses. There's going to be salaries and wages, a rent expense, and a utilities expense. First one we're going to put down our salaries and wages expense for $2,300. The next item we had was a rent expense, and that was $750, I believe. Let's double check. $730, sorry. $730. Oh, goodness, I don't have it. Okay, rent expense of $730. And finally, we had a utilities expense of $330. So here we will put our total expenses. And to find that, we simply are going to sum our wages, rent, and utilities expense. Comes to a total of $3,360. So here at the very bottom, we're going to put our net income or loss. And the way we find that is we're going to subtract our expenses from our revenues. We have revenue of $10,200. We're going to subtract our expenses of $3,360. Which looks like it gives us a total net income for August of $6,840. Okay, next item on the homework is to find a retained earnings. And again, we put a time period. We have month ending August 31st. And the first thing we have on retained earnings statement is the previous retained earnings to be August 1st, 2017. And if we look back here at the exercise, right up here in the description, it says 2017 Crane Company during its first month of operations. So that tells us that it's just starting, which means retained earnings will be 0. We're going to go ahead and add in our net income or loss, which we find from our income statement up here. And it's going to be equal to the net income right there, 6840. And so our total here is going to be our 6840 plus the previous retained earnings, which is 0. Next, we're going to subtract any dividends that may have been paid. So to find that, let's go over here to our journal, and we see right here dividends of $2,000. Let's go ahead and put that in. 2,000. So here we can now calculate retained earnings for August 31st, 2017. And to calculate that, we're going to take our total retained earnings plus income, and we're going to subtract any dividends we may have paid, which gives us a total of 4,840. All right, so finally we're going to create our balance sheet. And balance sheets, we only put the date they were created. So we're going to put August 31st, 2017. We're going to start with our current assets. First thing we want to do is we always list current assets in order of liquidity. Of course, our most liquid item is cash. So we come over here and we see our, let me make it a little smaller. We can look at our journal and see all of our transactions that involve cash. So let's pull up our calculator and figure out what we've got here. So it looks like we have a starting transaction of a $2,200 purchase, which looks like common stock. We're going to go ahead and subtract 1,240, which looks like it was an equipment purchase made partially on cash, partially on credit. So subtract 1,240 for the cash payment. We're going to subtract another 940, which looks like a supplies purchase. And we're going to add 4,000 right here, line item number 4, which looks like it was a service revenue. So total service revenue was 10,200. They paid 400 cash. Looks like 6,200 went onto accounts receivable. So we add that. We're in the next item. We have a $1,900 cash debit, and then we're going to subtract another 2,000, which looks like it's the dividends. We're going to subtract another 730 right here, which looks like it's the rent expense. We're going to add 350, which looks like somebody made a payment on their account. And then we're going to subtract 2,300, which looks like the salaries payment. And that brings us to a total of 15,440 for our ending cash balance. Our next most liquid item would be accounts receivable. Over here, it looks like there are 2 items to add up here. There's a 6,200 and then a negative 350 for payment somebody made. And that gives us 5,850 for our accounts receivable. Finally, our least liquid current asset would be supplies. And here we see that we do have supplies of $940. We're going to go ahead and total our total current assets. And that's going to equal the sum of our cash, accounts receivable, and supplies. which is 22,230. And if we look over here, we do have one other asset, which is equipment, which would go in the land equipment category. So go ahead, put equipment there. And the amount for equipment was 4,990. So that's all of our assets. We'll go ahead and total assets, which will equal of our current assets and the equipment, which is 27,220. All right, next we're going to move on to the liabilities and stockholders' equity. So we're going to start with our current liabilities, which is anything that will be paid within the year. And let's see, we come over here and it looks like we have accounts payable. So let's add those up, and we have 3,750. We're going to subtract 1,900, and we're going to add 330. So we have 2,150. Our accounts payable. And looks like that is all we have for our liabilities portion. So next we're going to go to stockholders' equity. And we always put common stock first on our stockholders' equity. And we can see up here, common stock, we have 20,200. The next line item on stockholders' equity is always the retained earnings, and it's always the ending retained earnings. It's equal to what we calculated up here at 4,840. So we'll go ahead and total stockholders' equity will equal the sum of our common stock and retained earnings, which is 25,040. Okay. Something's not looking right. One sec. Okay, I put that number in wrong. It's 2180, not 50. Okay, sorry. So total liabilities, stockholders' equity is the final thing we put on here on our balance sheet. And that is going to equal to our stockholders' equity plus our total liabilities. And we get 27,220. We come up here and say it's the same as our assets. And so we are all balanced. Hopefully that helped. And good luck to everybody.